Is Tesla a volatile stock? Yes, it is, but not in a way that most of us think. In this video, I'll share my take on volatility and what it means for me as a Tesla investor. Welcome back to Investing in Daren. Click subscribe to stay updated to more videos on Tesla. When I mention companies like Walmart, Microsoft, and Apple, you probably perceive them as very stable companies and safe investments. Yet, all of these companies have seen years where the stock price dropped sharply. Microsoft stock saw a 63% drop in the year 2000 after the dot-com bubble. Apple stock saw a 57% decline in the 2008 global financial crisis. Walmart stock lost 29% of its value in 2015 when it announced heavy investments into e-commerce and higher wages, which would impact short-term earnings. The S&P 500 declined 38% in the 2008 financial crisis. In some of these cases, like with Apple, Walmart, and the S&P 500, this stock usually saw recoveries within 1 to 2 years. In Microsoft's case, the recovery only happened 14 years later when Satya Nadella took over Steve Ballmer as CEO of Microsoft in 2014. Good leadership can play a big role. For all of these companies, as well as the S&P 500, holding them for 30 years got you positive returns to varying degrees. Apple grew 285 times or a 21% annual rate of return. Microsoft grew 120 times for a 17% annual rate of return. Walmart grew 10 times for an 8% annual rate of return, matching the S&P 500. Now let's talk about Tesla. Tesla's volatility in the past 10 years has mostly been volatility upwards. Tesla grew 344% in 2013 and 743% in 2020. The year with the largest decline so far is 2016 with an 11% drop. Knowing that even Microsoft and Apple, two very strong companies, could see the stock drop by as much as 60% in a single year, helps me be mentally prepared to accept even more significant drops. In that context, Tesla's current volatility is relatively mild. Volatility can swing both ways, which means that it can also go upwards. There were 6 years in the past 30 years where Apple stock gained more than 100% per year. This puts within the realm of possibility a few years of significant gains for Tesla stock. While Tesla is down 17% year to date, we are only 21 days in, or 6% of the entire year. A lot can happen. What I've learned is that taking a long view matters. All of the public housing that you see behind me in today's episode were a vision that took decades to bring to life. Today, more than 80% of Singapore's population lives in affordable public housing. As an investor, I'm going to take a 2030 perspective, a 10-year view, rather than ask what's going to happen tomorrow, next week, next month, or even next year. I believe that mindset helps me better manage the ambiguity that comes with the volatility. And I must make sure that I don't take on too much leverage to help me make it through bear markets when they come. If you found this video useful, please click the like button. Hit subscribe to stay updated to more videos on Tesla. Thank you for watching and see you in the next episode. Bye-bye.